Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, March 22nd. We got, again, this week's been kind of light on the economic data, but we do got the existing homes for today for the month of February. So back in January, we had 5.69 million existing home sales. Forecast shows it's supposed to drop down to 5.45, and it did drop pretty close into expectations at 5.48 million. So obviously, market probably a little disappointed with this, but a lot of this is, of course, attributed to lack of inventory out there. There's just not a lot of inventory out there right now to create these existing home sales. That's where we're kind of looking towards a lot of these new homes being built and hopefully creating a little bit more inventory for us out there. Let's go ahead and take a look at the headline news. Stock market's a little mixed. It did all start off down so far this morning, but since when I was writing this report, NASDAQ kind of rebounded a little bit, came into the black instead of the red so far this morning. Now, a lot of it, yesterday was a pretty big drop for stock market, and that had to do with the concerns that investors have that Trump's not having a good time trying to get his policies rolled out. So they still haven't seen any of his detailed policies. He's obviously having a hard time getting this healthcare reform taken care of, and that was what kind of drove the market yesterday, which the Dow closed down about 200. Over 200 yesterday, so it was basically a 1% correction yesterday. So all this euphoria that we've had since the election basically is starting to wear off a little bit. They want to see details, and basically the patience is being lost, and until they see those details and seeing these things implemented, he's starting to lose people right now as a result of it, and the stock market's been taking a little bit of a hit of that. So let's go ahead and take a look at the bond market. So this is boding well for the bond market. Yesterday we had a nice big rally. We just closed above the second resistance level yesterday, and today we started pretty much close to it, but we went upwards. We were as much as 21 basis points, but right now we're about 15 basis points higher. So that brings us to higher pricing, or better pricing or better interest rates today. So that means interest rates showed another day of improvement, and it continues this trend because it started off higher from where we left off and continued up. Helps us with the better trend going upwards, which gives us better pricing. So anytime, of course, you're looking at this chart and the trend going downward, and the lower we go, which just means the higher the interest rates are going. So just give you little perspective as to how to see this chart here. So when these are going upwards, that means rates are improving for us. All right, folks. So that's the good news for today. If you guys want any other updates throughout the day, just come over to Twitter. You can find me over at Mike Bjork, and I do post throughout the day. Hope you guys have a wonderful day yourselves, and we'll look forward to seeing you guys tomorrow. Take care. Bye-bye.